We got some stocks to be thankful for, a couple stocks that are turkeys, and of course, a stock for your grandma. You're in the right place, folks, because this is where the money is. Welcome to the show. I'm Matt Copenheffer. It is Wednesday, sort of. It's actually Tuesday. We're filming this ahead of time. I'm here with David Hanson and Morgan Housel, and we're going to talk about some Thanksgiving themes here. And let's start out with some stocks that we're thankful for. David, what's a stock that you're thankful for this year?
Thankful for this year, I'm going with PNC. This is a stock that I own and hasn't been a high flyer, but I'm still thankful for the runway going forward. I think things are lining up very nicely for PNC and PNC's strategy. They're trying to reduce the amount of branches they have out there, focus on collecting fees from their customers, being transparent with those fees. I think the valuation is still very attractive for PNC, so I'm thankful for what it's done for me so far, and I'm thankful for it going forward.
You're thankful that they're telling people that they're not getting anything for free.
Yeah, that makes sense. That makes me happy as a shareholder. Maybe not as a consumer. I don't have PNC as a bank, but I'm glad that they're coming up front and saying, hey, we're going to start charging. This is what the deal is. I think that's good for the bank.
It's good for consumers too, though, because there was never any such thing as free banking.
True.
That was just, you were paying for it one way or another, whether you knew it or not. I think it's better for consumers to just know what the fees are.
Pay for it up front.
Right.
I am thankful for Markel, and this is a stock that I own. The reason I am thankful for it is that Tom Gaynor and the team over at Markel are very clear, very transparent, very good about explaining the business and what's going on there to shareholders. This isn't always something that companies do very well, and I just like the idea that maybe other companies will see what Markel is doing and decide, you know what, we should let our shareholders know exactly what's going on too in an understandable, easy to read kind of way.
And it's worked for them in the past. I mean, you look at we talk about the runway for Markel and how much upside it could have. It's been a great performer over its time as a public company, so it's not like they're trying new things and hoping that's going to have good returns. They've been transparent, they've had good returns, so I see no reason why it wouldn't continue.
Morgan, you're not always an individual stocks kind of guy, so stock, otherwise, concept, event that you're thankful for?
I'm thankful for social media stocks this year, not because I'm investing in them. I'm not. It's not my style of investing. But I'm thankful that companies like Twitter and LinkedIn and Facebook that have done extraordinarily well as public companies have shown people that even with the Great Recession and this incredible fall in confidence and economic output in the last 5 years, that there's still huge innovation in America, and you can still create a good idea and overnight take it public and become filthy rich. That is still alive and well in America. I think in 2009, 2010, a lot of people forgot that. And it was really like we're in this dark ages of the economy and we're not like we used to be. But I think those companies have proven that innovation is still alive and well in America.
But do you think that that's widely accepted among people? I mean, I hear you say that, and I've heard you say that before, and it's true. But do you think people are really taking that to heart? I feel like there's still the idea that, oh, America has fallen behind. We're not what we used to be.
I think that is largely still the feeling, but I think these companies have proven that that is more of a feeling than it is reality. It's perception rather than reality. I think companies, especially companies like Groupon, even though it's had a big fall lately, Groupon was created like smack in the middle of the economic collapse of 2008. And overnight became this huge sensation, started right in the middle of the recession. That goes to show that no matter what the economy is doing, there can still be opportunity out there for smart, savvy entrepreneurs.
Sure. All right. That's what we're thankful for. David, what is a stock that's been a turkey so far this year?
I'm going to cheat a little bit and give kind of an industry /4 stocks that I'm
okay.
Maybe not. They haven't been turkeys, but I think they have potential to be turkeys going forward. I'm going with Canadian and Australian banks. We talk about the Canadian housing market as potentially looking a little scary. If you look over at the Australian housing market and the Australian economy, in my opinion, it looks maybe worse than what the Canadian economy is doing. And when I say worse, I don't think it looks bad now, but the kind of the warning signs I think are there, especially for the banking system. The banks that I pulled out, RBC and TD in Canada, and then for Australia, Commonwealth Bank and Westpac. Especially the Australian banks paying out a lot of dividends right now, trading at very high multiples. Just very reminiscent of the financial crisis here, and I'm not saying we're going to see a complete redo of what we saw here, but I just don't think the returns perspective look very attractive right now in either of these markets, so I'm calling them turkeys.
I like that you're having some U.S. pride there, bashing some banks that are outside
It's a
the
US holiday.
You know, I'm going to continue that theme, and I'm also going to cheat a little bit. I've got HSBC, RBS, Royal Bank of Scotland, and Barclays. We're so focused on all of the fines and all of the settlements that U.S. banks have been paying. Not just U.S. banks. I mean, HSBC was hit with that big suit by the U.S. Department of Justice for allowing drug traffickers to launder money, allowing money to be funneled to Burma, Cuba, and Libya. You've got the LIBOR rigging scandal, which hit Barclays hard. Granted, you also got some U.S. banks, but we're not going to worry about that right now. We're gonna focus on the fact that that HSBC, RBS, and Barclays, they're my turkey stocks.
It's better to ask what laws have they not broken.
Yes.
That's a shorter list.
That's fair. That's fair.
Hey,
How
they're
about you?
facilitating the economy in Burma, so don't give them too much of a hard time for that. It's important.
Yeah, very important.
Something I've paid a lot of attention to for the last 3 years is the increase in housing starts, the number of homes that are being built. Well, home builder stocks would be a natural way to play that theme. I hate the word play, but I'm going to use it here. To play that theme. It makes sense. Housing starts are going up. Builders are building more homes. That's good for their business, and it is good for their business. But home builder stocks as a group did so well in 2012 that even though housing starts kept going up this year, a lot of those home builder stocks have been turkeys, so to speak. And I think it's just a reminder that linking a theme in the economy or an industry to stock performance, especially in the short run, can be two very different things.
Nice.
So what about the long run with that story? Is there going to be a point where home building stocks become attractive again, or kind of what's the
it
trade-off
always
there?
comes down to valuation, and a lot of them still trade at pretty high valuation. So even though I think housing starts are going to have a long way to run, probably 50 or 75% above where they are now, the question is, are the home builder stocks already pricing that in? I think they're already pricing a lot of it in. So you really start getting down to, I think in 2011 you could look at it as a group and say, the whole industry's cheap, it's going to do well. Now you really got to start looking at the individual names of who has the best balance sheet, who's in the best locations, whatnot. It's a lot trickier now than it was a few years ago.
Cool. All right, and finally, sitting around the Thanksgiving dinner table, grandma's there, your uncle's there, your brothers, sisters, nieces, nephews. What are some stocks that you'd recommend to family members and different types of family members? So your grandma, your uncle, and let's say your niece. Okay. What are some stocks that you'd recommend to them?
All right, for grandma, going with healthcare REIT. This is somewhat appropriate for grandma here.
That's horrible.
So they operate nursing homes and elderly people homes. It pays a nice dividend for grandma there. She needs the income. It pays a 5% dividend. The stock's been whacked this year as kind of the broader dividend stocks have been sold off a little bit recently. It's a good company. It's a big space here with the elderly population in the U.S., so going healthcare REIT for grandma. For my uncle, going with Wells Fargo. He could also use some income there. Pays over 2% dividend. Solid bank, going with Wells Fargo. And for my niece, she's 3 years old, I'm getting her a Bitcoin. You never know what's going to happen. Going with the Bitcoin. I know you love the Bitcoin.
It's horrible.
It has potential to be something huge.
You hate your niece, don't you?
If it goes to zero, she's 3 years old. She can handle that loss of principal. So going with a Bitcoin for her.
All right, I've got to follow that. For grandma, I'm going with Berkshire Hathaway, and that may seem counterintuitive because for people near or in retirement, it may seem like, oh, well, they need income, and Berkshire Hathaway does not pay a dividend. But what I like about Berkshire Hathaway is that it's safe, it's reliable. I feel like there's still plenty of growth ahead for the company, run by great management, obviously. And I think it's important to remember, too, that even in retirement, it's not just about getting that dividend payment, getting that income. People are living longer and longer, so you have to remember that you need the money to continue to grow so that you can pay for your entire retirement, and some capital appreciation from Berkshire Hathaway is a way to do that. For my uncle, going with Goldman Sachs. Why? Because, I don't know, my uncle's bloodthirsty and just wants to make some money. Maybe that's why. No, Goldman Sachs, a great company, great valuation, I think, right now. And kind of a middle of the road there between what we're implying here, grandma with a sort of shorter term retirement type perspective, and niece, which is very long term. So Goldman Sachs for that one. Finally, for my niece, this may surprise our regular viewers and listeners, but I'm going to say Bank of Internet.
And priced in Bitcoins.
Oh, there you go.
Yes, priced in Bitcoins. Bank of Internet priced. No. I've complained on this show that I think that Bank of Internet, the stock is trading at a premium valuation right now. I do think that that's true. However, when I'm thinking in terms of my niece, very, very, very long time horizon, and hopefully going to be joined by many stocks in a broad, diversified portfolio. And if you look at the size of Bank of Internet today and the opportunity that it has going forward, it's a big swing. And if it works out, it could pay off really nicely for her over that very long time perspective. And that's all I've got.
I'm just going to take the grandma one, and it comes with the story. My grandparents had the vast majority of their money in one stock for almost their entire lives, and it scared the pants off of everyone else in their family. It worked out okay with them, but there are so many different scenarios you could think of where it turned out disastrously.
Yes.
And it came close a couple times and really, really frightened the entire family. So my advice, you mentioned I'm not much of a stock picker usually, but my advice to all investors, including especially grandparents when they're not working anymore, they really need to rely on their net worth, is just broad diversification in something like a Vanguard index fund. You can have a Vanguard total stock market index fund. The fee on it is almost zero. You own, basically what you're doing is owning a slice of the US economy. So whatever the US economy does over the long run, that's effectively going to be your return. And your relatives will sleep much better at night than we did watching my grandparents.
And you can get index funds too that'll diversify across the entire world too.
Right.
All right. Well, that's the show for today. As always, you can reach us on our email. That's WTMI@fool.com. You can also get to us on Twitter. That's @TMF For David Hansen, Morgan Housel, I'm Matt Copenheffer. We wish you a very, very happy Thanksgiving from Where the Money Is and from the entire Motley Fool family. We will see you on Friday.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. Don't buy or sell stocks based solely on what you hear.